to
This
ask
conference will now be recorded.
if you see the presentation, the slides.
Yes, we can see it.
Okay, so I will just briefly start with the structure of my presentation. So Daiva asked me to cover more of a global economic context, which I will. So I will start from a situation in the United States. Then I will go to China, and then I will go to Europe. Now, I do such presentations regularly, and I update the slides all the time. So this information is absolutely the newest that you can find in terms of data. The slides, however, are in Lithuanian, but I will explain the graphs in detail, so you will perfectly understand what those graphs mean and what the numbers are. So let us begin with United States, and here you see how the recent data from the American GDP looks like. So basically there are some positive aspects and negative aspects. So positive aspect is that the decline of American GDP has decreased, the ratio of decline. And that is basically due to several aspects: economic stimulus plan and domestic consumption, which is recovering due to the fact that labor market is recovering and consumer sentiment is recovering. But I think that probably so far the economic stimulus plan is still playing the biggest part, because basically right now there's only one American GDP component which is increasing, and this is governmental consumption. But if you look at the recent data, we can see that right now there are more and more signs that the US economy is recovering. And by that signs, I will talk about these two graphs. So what these graphs are, they basically show the sentiment and level of optimism in manufacturing industry. This graph to the left, and services sector. This is graph to the right. And in this case, the critical number here is 50 points. If this graph is above 50 points, this means that manufacturing or services companies, they expect situation in economy to improve. So both sectors, both manufacturing and services sector in America right now expect economic situation to improve. But on the other hand, basically right now there is one major drive force or major locomotive which is driving upwards the American economy, and this is industry. Now, why manufacturing is recovering? Basically for two reasons. First, global consumption is recovering outside United States, and by that I mean predominantly China. And second, consumption in the United States is also recovering. And I think third factor is that companies are producing the goods which they did not produce during the first quarantine, and they are basically building stockpiles of products, which is the third reason why manufacturing is recovering quite fast in the United States. But the biggest positive news is presented in this slide. And if you look at the graph to the right, you will see the change in retail sales in United States. And in the last 2 months, September, October, the data has been super positive. So annual growth was very close to 6%, which is very nice. And as I mentioned before, there are two reasons why this is happening. Number one, consumer sentiment has been improving quite significantly, and you can see this improvement in the graph to the left. And basically, the better consumer sentiment means that consumers are more prone to consume and less prone to save money. And the second thing is labor market, which is improving, I would say, dramatically, but in a positive way. And higher employment automatically means that people have more money to spend. And again, this improves consumer sentiment, which again drives consumption upwards. And I would say that this graph is one of the most important graphs that I will show today. because it is actually critically important to European economic recovery. Why? Because European export and European manufacturing is heavily dependent on two regions, America and China. And both in America and China, consumption is recovering. And as a result, right now, optimism in euro area industry is, I would say, highest in almost 2.5 years. So manufacturing in Europe is booming, but it is booming not because of recovery in Europe, but because of economic recovery and specifically consumption recovery in United States and China. And probably this trend will continue. So if clients, if companies which are present here, if you're working in manufacturing sector, congratulations, your sector will be booming quite a lot this year and also probably next year. And here you can see the graph with unemployment rate in America. So it was almost 15% during the peak of pandemic. Now it's 7%. So it's basically twice as low as it was before. Another interesting fact that we should also talk about is that right now, basically, we have two American economies. One American economy is financial markets, and you can see the indexes here. And another American economy is real sector, so manufacturing, services, retail trade, and then so on. So financial markets have been also booming lately in the United States, and major indexes in financial markets, they reached historical highs very recently, 2 weeks ago. And I think that this is basically due to the fact that American Central Bank is also pumping a lot of money into financial system. And you can see this graph to the right. So the assets of American Central Bank, they have exploded during this pandemic. And basically what this means is that the central bank is printing money and putting this money into financial system. And automatically this results in a fact that American financial markets are booming because this money is basically directly pumped into financial system. I will move to China, and I will start probably with the most important slide, COVID-19 trends. As you can see, China is probably one of the few major economies in the world which has avoided the second COVID-19 wave. They don't have any second lockdowns, so the economy is functioning as usual. And this is also very important talking about the current economic situation in China. This slide is like extremely important. And this economic situation in China is very nice. Basically, right now, the economy has shrugged off the consequences of COVID-19 and first lockdown, I think, almost completely. And the graph to the left shows the rate of recovery in Chinese manufacturing, which for us is not very important. For us, the most important graph is to the right, and this shows the recovery of China retail trade. And as you can see, both in US, both in China, the numbers are extremely good. I mean, like really extremely good. When I was presenting those kind of presentations in summer, I always said that so far the rate of recovery in Chinese consumption is very weak because in summer and in spring, the main drivers of Chinese consumption were basically necessary goods, so necessities. Now, right now, this situation is absolutely different. And the main drivers of China consumption right now are not necessities, but goods of secondary importance. And this is also critically important because basically it's this kind of trend shows that right now the Chinese consumption recovery is really sustainable and quite fast. And I can give you several examples in this table. For example, automotive sales in October jumped by 12% compared to October 2019. Building decoration material plus 4%. Furniture sales are increasing. Also, household appliances is increasing. Probably the most interesting thing is gold, silver, and jewelry. This is like luxury products, and sales of those products is booming. Also textile, which was declining for, I don't know, like 5-6 months in a row. Now the sales have increased. And also catering services. For the first time this year, sales of catering services were higher than in 2019. So again, this shows that domestic consumption in China is booming. And again, this is super important for European manufacturing companies, because automatically when the consumption in China is recovering, this means that demand for import from EU in China is increasing, because they depend on imported goods, basically speaking. And this is a very nice information for European industry, which shows that in the near future, probably again, European manufacturing will be having quite a lot of orders, which is again very nice. Now, when it comes to Europe, I will actually start probably with the recent information about COVID-19. And now we have sort of interesting trend in Europe, because we have both good news and bad news at the same time. Now, the good news is that if you look at weekly average of daily cases of COVID-19, then we will see that in the majority of countries that have implemented second lockdown measures, number of new daily cases has started to decline. So this is good, and this basically shows that those contingency measures which we implemented in autumn and this winter, they have started to work. This is good news. Now, the bad news is that so far the weekly average of daily deaths, this number is still increasing. And this means that the epidemic so far is under control only partially. And this also shows that probably so far the rate of decline in lockdown measures, it will be very slow. So there will be less lockdown measures in the first quarter of next year, but don't expect those lockdown measures to be cancelled just like in one day. It will be quite a slow process. Now, those countries that I covered here is Austria, Czech Republic, Poland, Italy, and France. So basically, all of those countries who had very high numbers of COVID cases per capita, they implemented quarantine measures, and it seems that those quarantine measures have worked. Now, Lithuania so far has not experienced the stabilization of second COVID-19 wave yet, but the government is implementing quarantine measures, and I think that we will reach the peak of epidemic soon, but still we haven't reached this epidemic. And another piece of positive info is that we're very close to a vaccine. Probably everybody heard that UK has started vaccination, and if I know correctly, then European Commission will officially start vaccinating people probably at the beginning of January. So probably by the summer, the epidemic will be over, and we will have this mass immunity from this virus. And right now there are more and more companies which are very close to official roll-up of the vaccine. So you probably know Moderna, Pfizer, AstraZeneca, but those are only several companies. As you can see from this graph, there are a lot of companies which are basically in the final stage of mass testing of vaccine. And this vaccine should be approved probably end of this year and or next year. In the United States, I think we should expect some sort of information either today or at the beginning of next week. And I think that the conclusion of American safety regulator will be also positive. So they will probably also approve the vaccine. Now, when it comes to European Union GDP, I would say again, there are positive news and negative news. So positive news is that if you compare second quarter and third quarter, so third quarter is better. The economy is dropping, of course, naturally, but dropping at a slower rate than in the second quarter during the peak of pandemic. Now this graph is a little bit old because this week Eurostat has updated the numbers, and we have Ireland has pushed Lithuania to the second place in regard to GDP dynamics in the third quarter. So Irish economy increased by 8.1% in the third quarter of this year compared to third quarter of last year. This is basically because of two reasons, but mostly because of Ireland's competitive business climate, because they have very strong ICT sector, and added value of ICT sector increased by 3.5 billion euros. And secondly, manufacturing, but 40% of Irish manufacturing is generated by pharma industry, 40% of sales of Irish manufacturing. So naturally, pharma industry and IT sectors are booming, and this is why the Irish economy has increased by 8.1%. But Lithuania, for example, right now occupies the second place in Europe in regard to GDP dynamics. Our economy declined, but declined only by 1.7% in the third quarter. This is basically twice as slow as the European Union. And of course, countries which are more heavily affected is countries which are more dependent on restaurants and tourism. For example, Spain. Spanish economy declined by 8.7% in the third quarter, but again, this is very normal because economy of Spain is more dependent on services, especially restaurants, tourism, than, for example, Poland or Lithuania, which are basically dependent on manufacturing. And this is also a very important piece of information. Economic structure plays a very critical role in recovery from COVID-19. If you look at this graph basically shows the ratio of recovery of EU different economic sectors and impact of second lockdown on those sectors. So if you look, for example, on the services sector, you see that in November optimism has declined again, and quite dramatically. This is because of the second lockdown. On the other hand, if you look at the industrial confidence indicator, you can see that basically the level of optimism of industry basically remains the same. And this is another indicator that so far industry is the main driving force of economic recovery in Europe. Services sector, naturally, because of very natural reasons, they are lagging behind. But on the other hand, there are also some problems. First of all, definitely there are signs that second quarantine has had an impact on business confidence. Industry also optimism has declined a little bit. Retail trade optimism has declined. Consumer sentiment is not increasing, and service sector has declined. So basically, this means that we should expect that fourth quarter in Europe will be worse than third quarter. On the other hand, if you are an exporting company and especially working in manufacturing, then I would suggest that your company focuses on these export markets, especially Germany and Sweden, because in Germany and Sweden, manufacturing confidence right now is even higher than it was in February. And this is a result of very, I would say, quite fast recovery of domestic demand outside European Union. So if your company is exporting some goods, I think you should look at Germany and Sweden, especially in regard to the contract manufacturing. If you are exporting goods generally, you should look at American and Chinese markets if you're an exporter of final goods. But of course, there are some problems and challenges which I would also like to cover when it comes to European economy. And challenge number one is consumer sentiment, which, as you can see from this slide, is quite cautious. So the second lockdown definitely had its impact on consumer sentiment in the European Union. Consumer sentiment declined. And another problem is that if you look at the graph to the right, you see the annual change of deposits of Eurozone households in commercial banks. And the record right now, this annual change is at almost historically highest level, and highest level from the beginning of COVID-19 pandemic. And this basically shows that European consumers are right now very keen on saving money and not keen on spending money. And right now, total deposits of of Eurozone households in commercial banks, they stand at 8.2 trillion euros. Again, this is both good and bad news. So bad news is that right now savings rate of European households is at historically highest level. But on the other hand, the good news is that when the vaccination will start, and it will start early next year, consumer sentiment in European Union will jump, and this will mean that people will start spending those, at least part of those 8 trillion euros that they have accumulated right now. And basically the same goes to the businesses. Right now, Eurozone businesses have accumulated 3.1 trillion euros of deposits in the commercial banks. And this means that when the vaccination will start, companies will start spending money. They will start investing in business development, and they will start hiring people. And this will be, again, a very good news for the European economy. So basically, to sum up, next year we will see a very drastic difference in economic cycles. So I would say that until summer, economic situation will remain quite difficult because of the fact that it will take some time to vaccinate people from COVID-19. So recovery will be, I would say, very gradual. But on the other hand, expect dramatic economic recovery in summer and autumn and winter. So if your company is very much dependent on changes in, for example, retail trade or domestic demand, you should expect and you should prepare right now for very dynamic recovery of European economy, which will happen in the second part of next year. Basically, that's it. Daiva asked me to present not more than 30 minutes, so right now we have 12:26. So if anybody has questions or comments, please ask me, and we have some time for answer of those questions. Thank you.
So thank you a lot for a very interesting presentation. And do we have any questions? If no, I would like to ask one. Alexander, what is your opinion? How long it will take for the most affected sectors to recover, such as tourism?
Yes, this is a very good question. I would say that I am an optimist, and I think that after the second lockdown that we have experienced and that other countries have experienced, people will be very hungry for traveling, and people will be also very hungry to come back to offices and not only to work but also to socialize with the workers. So my opinion is that once the vaccination will be more or less finished, and it will be finished before summer, there will be a massive recovery of tourism for two reasons. First, people are very hungry to travel because they did not travel for 1 year. And second, at least European consumers, they have a lot of money to spend because economic stimulus measures have resulted in the fact that people received money, but they did not spend the money because almost everything was closed, and it was closed again in autumn. So I think that tourism will actually recover quite quickly, and the second thing which will recover very quickly is business traveling and also people coming back to the offices, because you come to the offices not only to work but also to socialize, and right now people don't have this.
Okay, thank you a lot. So if we don't have any more questions, so I would like to thank for attending our webinar. We hope you enjoy it. And the recorded version will be available in the BNet website. And thank you again and have a nice weekend.
Thank you. Goodbye.